Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, let's take a look at the euro currency again. Well guys, so it has happened that on the previous week we have spent the discussion of the euro currency day by day, since we mostly were focused on Great British Pound. That was really a successful week for us. Well, and in general situation on the euro currency in recent trading sessions almost coincides with the situation on Great British Pound, although the fundamental and large-scale picture is different. And by today's looking on the euro currency, we have a lot of significant moments in the fundamental part that stands in relation with the euro currency and on the monthly chart. In fact, on the previous week we said that on the monthly chart the May candle could become the reversal candle for monthly chart, and it will depend on where May will close, at what price. And since May is coming to an end, the chances on appearing of the reversal month on the monthly chart becomes greater and greater. And if this will really happen, that will give us more confidence with the expecting of the downward action on the euro currency, not maybe to break out to the downside significant levels, but maybe to the area around 133, 130, 134. That's very probable. On the shorter scale, if we'll take a look at the weekly chart of the euro currency, although the situation there stands very nice and in fact cloudless bearish setup, but I think that market should take some pause in the downward action on the coming week, and mostly due to the situation that we have right now on the daily time frame chart. I do not know how long the situation will last on the daily chart. Maybe a whole week, maybe the most part of the week in the beginning of the coming week, but the downward action hardly will continue immediately. And that is the object that we will discuss in today's daily update on the euro currency. So you can see that euro currency has reached significant area of support. That is FIB support 136.74, and that is simultaneously the daily oversold. Here we see the appearing of the hammer pattern. Okay, so that is the short-term bullish setup. It doesn't change the overall bearish sentiment. The trend holds strongly bearish here, but that is Jordan-Napoli directional pattern that calls the stretch. Stretch mostly has the retrace quality, and it doesn't has the momentum quality. It never leads to some such sort of the action, but in the opposite direction. Absolutely not. But stretch, since this is really strong combination of the support, that when the FIB support stands in agreement with daily oversold, it combines in one strong area that market can't pass through just immediately and at one moment. So it needs to take the pause and show some retracement out of it to correct the oversold condition. And that will be the object for the trading in the beginning of the next week. Since Jordan-Napoli framework suggests that direction overrules trend, it means that when you have the directional pattern, it should be treated as more valid and more significant than trend direction. So we have the bearish trend, but we have bullish directional stretch pattern, and the stretch overrules in this case the downward trend. Hence we could get some bounce to the upside. As the target of this bounce, I think that we should use this area, because this is weekly pivot resistance one, and nearest major 3-8 resistance 137.80 area. Also take a look that here we have some natural support resistance area. Okay, so that will be quite solid level and very suitable for treating it as the target of this possible bounce up. So although this may be not very impressive room, so somewhere around 100 pips, but still I think that's not bad at all. Well, another significant moment here is weekly pivot resistance one. Since on the weekly chart, on the monthly chart, we expect, and we have in fact bearish setup, weekly pivot resistance, we will use it as the indicator of the trend strength. Because if bearish trend is still valid, and whether we could expect some more continuation to the downside, the weekly pivot resistance 1 should hold retracement up. So the rule usually the usual rule of using the pivots tells that if after the strong downward trend the weekly pivot resistance holds the retracement up, it means that trend is still valid and downward action should be continued. Well, that is the second meaning of this level for us. The first meaning is the possible target, is this area, the upward retracement. The second meaning is the weekly pivot resistance 1 as an indicator of the bearish trend continuation. Okay, that's two major points that we will monitor in the beginning of the next week. Now let's take a look at the hourly chart. On the 4-hour time frame chart, guys, I do not see much interesting except maybe this bullish divergence with the MACD. While on the hourly time frame chart, this is really a significant picture for us. On the hourly chart, we see this hint on the possible head and shoulders pattern, right? And the part of this pattern stands as the butterfly. That's very typical issue. Take a look that the head stands almost at the 1618 extension of the left shoulder. The 1618 is very typical ratio for head and shoulders pattern. And here we have this really nice action that reminds the railroad tracks. Okay, on the daily time frame chart it looks like the hammer. Since we did not have the action, take a look, it's 136.45. The last time when the action stands at this area was on February. So 3 months in a row. This action is approximately 100 bars. So it's not quite large for treating this as the railroad track, but still the action looks very similar, okay, to the railroad track. Anyway, the hammer pattern in general suggests the same framework of dealing with it. So reverse head and shoulders, part of the pattern stands as the butterfly. Now take a look as the right shoulder is developing. So we have some sort of the A, B, C top pattern, and 1618 extension stands in agreement with the 618 support is 136.80 area. So in fact this level will be the last level for treating, last level that holds the possibility for taking long position. If market will pass through it, in this case we will have to wait a bit and watch what will happen, because that will put the shadow on the perspective of upward bounce, the immediate upward bounce based on this pattern, and this could lead to the failure of the head and shoulders on the hourly time frame chart. That's why this is in fact the last level where market has to bounce up. If market will pass through it, it not absolutely means that upward action is impossible. It just will mean that this will be absolutely another story, and market could form another pattern. For example, this could be some kind of the double bottom. Okay, maybe market will form even some sort of the three drive and the butterfly or something of that sort. But in this case, we just will have to forget about this head and shoulders, and we will have to create another analysis compared to the situation that we will get on this possible moment. But right now, let's resolve the problems when they will appear, because right now we have this pattern and we will be monitor with the head and shoulders pattern. Besides, appearing of some double bottoms and something of that sort is not quite welcome when you have the hammer. It means that market will probably take out the lows of the hammer, or will create something that will not be very good for this pattern itself. That's why I really count on the action according to this head and shoulders pattern. But who knows, everything could happen. Anyway, the oversold still stands on the daily time frame chart. Whatever it will happen, whether it will be head and shoulders double bottom on through drive or butterfly or something of that sort, the overall situation on the daily time frame chart suggests that market probably will take the pause in the beginning of the next week with the downward action, and probably will show some retracement to the upside. That we assess the possible target of this retracement stands around 137.80 EUR.